We're going to be going through should regional Victoria and predominantly some of the regional hubs in Victoria be on your watch list. In this session, I'd love to discuss some of the leading and lagging measures, so past performance and future indicators around these regional Victorian hubs. Predominantly today, we're going to be going through Ballarat, Bendigo and Shepparton in detail. Before we do get into it, just an advice disclaimer, none of this is financial advice, tax advice or legal advice. This content is purely based on current market trends, general principles of property, and we strongly recommend that you seek financial advice tailored to your specific goals before making any investment decisions. That being said, if you are looking for somebody to help you out in your property journey specifically, I'm more than happy to help you out. So look, in comparison to the rest of the nation, regional Victoria over the last few months has performed fairly moderately. You can see there's been 1% growth over the last 3 months to date. In comparison to some of the other capital cities, it's fairly in line. In comparison to some of the other regions like regional and regional Victoria, not as great. You can see there that 2% for WA and Queensland respectively. If we have a look over a 12-month time frame here, regional Victoria has slid back 0.9% in value in the 12 months to April 2025. You can see there in comparison to Melbourne itself fared better off there. But in comparison to the other regions, it hasn't done as well at all. And that's not an indicator of future performance either. If we have a look at the heat map here, you can see that Ballarat, Bendigo, and Shepparton have performed moderately over the 12-month period. When we look at the rental growth in the area, rental growth is between sort of 0 and 5% there, or between 5 and 10%, depending on the area that you're looking at. Bendigo between 5 and 10%, and even some clusters in Bendigo that looks like 10 to 15% growth there as well. Similar with Shepparton. So the main part of Shepparton there, 0 to 5. In the outer area, Marupna here, that is between 5 and 10% in rental growth. Rental growth has been mixed and very patchy in Melbourne. If you have a look at the Geelong area there, you've got rental decline there in Geelong and in some of the other central Melbourne areas. And then growth has been fairly patchy around southwest and eastern, southeast and eastern Melbourne there. If we have a look at some of these sales volumes over the last 12 months to date, sales volumes have actually picked up in regional Victoria over this 12-month period. You can see that there's an increasing number of sales over the 12-month period, almost 18% in regional Victoria, which is the biggest performer out of the regional areas and second only to Darwin in terms of capital cities and regional areas there as well. So sales definitely picking up there in regional Victoria. If we have a look at the median vendor discount, so the difference between the list price and the purchase price, regional Victoria has increased its vendor discount there from, albeit meagerly, from 4 to 4.1% there. So slightly more of a discount being provided from the list price there. That is fairly on track for a number of the regional areas there. You can see there that a number of regions are at around about that 3.5 to 4%. Some regional areas like regional Northern Territory at around 5.9%, but most of them are around the 3.5 to 4% there. In comparison to the capital cities, most of the capital cities are at 3.5 or below in terms of vendor discount rates there as well. So a little bit more of a discount on properties in regional Vic. If we have a look at the number of new listings on the market in regional Victoria, we're down about 18.2% in terms of new listings being added to the market. And then in terms of total number of listings, it's only a meager 1.5% in being added in total number of listings there. So fewer new listings coming to market and relatively little in terms of total listings. Typically that will mean that the listings are staying longer on the market when we have a look at those two metrics together. If we have a look at how that compares to the other region, it's very similar for New South Wales. In terms of rest of Queensland, it's similar. WA, again, around about the 16%, Tas 19.4%, and then Northern Territory, 25% fewer listings there. In terms of total listings, you can see total listings here, not much of a consistency in terms of the regional areas, apart from WA, with 17% almost fewer total listings there. Vacancy rates for Ballarat, we'll get a little bit more specific. You can see there that since 2016, vacancy rates have come down considerably. You were looking at around the 3 to 4%, 3.5 to 4% vacancy rate since 2016. That has slid all the way up until the probably 2019. Then we crept up to around about the 3%. And then over COVID, you can see there that vacancy rates have consistently remained between the 1 and 2%, albeit some volatility in terms of the number of vacant properties there. At the moment, we've seen a decline since the middle of 2024, and vacancy rates have come right down towards the 1% mark, which is around about the national average. We're looking at about 1 to 1.2% in terms of average vacancy rates. If we have a look at Shepparton in general, Shepparton have had a history of low vacancy rates over the last 10 years. In the years between 2015 and 2020-ish there, we had vacancy rates of between 1.5% and 2% there on average. Since COVID, since 2020, we've seen vacancy rates come down to around the 0.5% mark and then creep up over the last couple of years. So vacancy rates are a little bit higher, but still in line with overall averages here. We've got a vacancy rate of, again, roughly the national average of 1.2, 1.3. So vacancy rates are relatively stable there around that national average, although it has crept up recently. And then lastly, Bendigo. So Bendigo has seen a consistent trend in a downward trajectory of vacancy rates there. So similar to the other two regional Victoria locations, you're looking at a vacancy rate of around about 1.5%, which is slightly above the national average of 1.2 to 1.3% there, albeit there is a downward trend, a downward and consistent trend there in vacancy rates. If we have a look at rental yields across the regional Vic locations, focusing on those three areas there, you can see Ballarat has a rental yield of just over 2.5 to 3% there. You can see that Bendigo has a higher rental yield there. We're looking at closer to the 4 and 5% there. And then Shepparton is a little bit higher. You're seeing rental yields of between the 5 and 5.5, 6% there as well. So if we have a look at the comparison of rental yields there, we can probably order it pretty effectively here. In third place amongst those three is Ballarat with the lower rental yield. You're looking probably 3.5 to 4. Bendigo slightly higher. You're looking probably 4 to 5. And then Shepparton, you're looking low 5s to low 6s there in terms of the overall rental yield. This is a bit of a case study of a property that's sold in Bendigo. It was sold via auction campaign recently. It got $560,000. If you add stamp duty and upfront costs to that, you're looking at $33,000. So assuming 20%, what's that? That's 112 plus 33. That's 145 just to get your foot in the door. It's 145,000. I wrote it there. 145,000 just to get your foot in the door. You're left with 80% debt on that. And then the rental appraisal on this one was $505 per week. So it's right on the gross rental yield for the area of 4.7%. Council rates are about $3,000. Water rates about $800 a year. Landlord, home and contents insurance about $2,500, depending on the insurer and the level of insurance that you go for. Just use it as a guide. And then average property management costs of about 8.8%. So that doesn't include any admin or any maintenance or anything like that. And so overall, when you take this into account, including your interest-only loan repayments based on 80%, using an interest rate of 6.5%, I know interest rates have just come down, but we'll use an indicative interest rate of 6.5% on that interest-only property. You're looking at ongoing costs of $11,500 per year. So you're going to be out of pocket roughly $220 per week on that property there. So that is all that I've gone through in this session. I'll just double check for any comments. I will leave this last opportunity for anybody to ask any questions that you had on regional Vic locations. Apart from that, I'll use this time to let you know about my mentorship program. I'm looking to mentor those rentvestors, wealth accumulators, or pre-retirees that are looking to invest in property on their own and they'd like to learn how to do it. Please don't hesitate to get in touch. I'd love to be able to teach you how to go through the correct process of purchasing an investment property. Apart from that, if you do have any questions property related, please don't hesitate to get in touch. If you do have any questions around who the best financial service professional to get in touch with, I'm more than happy to guide you and refer you to somebody within my network. But apart from that, thank you very much for your time and I wish you all the best.